Morning, everybody. It's Brian. It's Friday, the 28th of August, end of the month. Can you believe this year has flown by in spite of being stuck inside for the better part of it? Anyway, I don't know why. Anyway, just gonna do a quick update for the day, talk about what we're looking at, what we're potentially trading, and then let you guys get on with your day. It's gonna be really quick today because I don't have a whole lot of stuff to talk about. I did send an email and post the link in Facebook yesterday, so if you guys want to hit that up and register for the event that I'm speaking at next week, go ahead and do that. You get some cool freebies with it, and you'll get access to the 3-day event, which you don't have to spend all 3 days just sitting there. You can, once you're registered, you can catch bits and pieces of it live, and then it'll all be put into an area where you can take snippets from each of the presenters and watch those individually on your own time. So anyway, what's going on in the markets for the day? Well, let's start with looking at news, because that's the big place to begin, is we want to look and see if there's anything high impact that would potentially keep us out of the market. So we'll start there. Then we'll talk about forex, then we'll talk about futures, and then we'll let you guys get on with your day. I haven't talked about crypto in a long time. I'll start talking about crypto again next week. I've had these other charts up on TradingView, and just on monitoring something that I'm about to release, and I haven't wanted to switch those and switch back and go through all the rigmarole, which I know I could just create a template and it'd probably be easy, but it just, in my head, it seemed like more hassle than than it was really worth. So anyway, let's jump into the news stuff that's going on. So always, before you begin your day, look and see if there's anything planned that's happening. I mean, obviously anything can come out of left field. They could announce, all of a sudden they could announce a vaccine for COVID. There could be a new, trade agreements meltdown between U.S. and China. I mean, there could be anything that just suddenly hits the headline. You can't plan for those. That's why you always trade with a stop loss, and you have a plan in place that allows those unplanned events, things that really move the market in an unplanned way, that you survive those. But then there's planned events. There's things that is going to happen. And those are the high impact events that we're looking for every morning before we start trading. Is there something planned that could have a really big impact on the market? And if there is, maybe I don't need to trade during that or around that, right? So it's not so much as, and I know I sound like a broken record with this stuff, it's not looking at the news so that we can watch, okay, let's just say, for example, non-farm payroll was today. It's coming up next week, but let's just say it was today. It's not so that we can see that there's a red news and report coming out, and then sit here at 7:30 Central, 8:30 Eastern, hitting refresh, to see what the report came out as, so that we can then jump into the market. Some people do that. More power to them. They like to trade the news, and more power to them. For me, I used to do that when I first started trading. Actually, for a few years, I would, when news came out, I would be sitting there clicking that button too, and going, oh my gosh, non-farm payroll came out, really negative, and here's what I'm gonna trade. And I would take that trade, pretty much immediately on the news, not letting the market do what it was gonna do, and then wonder why sometimes the market moved in the direction that it, quote, should, based on the news, and sometimes it didn't. Once I stopped worrying about it and just said, okay, I need to see what the news is so that I can maybe just stay away from the market right now. Let the news hit. I don't care what the result is. I mean, I care as a human being, but I don't care as part of my trading plan. I just want to know when the news is going to happen so that I can avoid it and not get caught up in that mess or the chop that occurs around it. And then I said, I'm just going to sit back. We're going to let news do its thing and then come into the market. And it made it a lot less stressful than trying to trade the news and trying to figure out which direction it, quote, should go based on what the result is. Because reality is, it's different every time, just like everything else is in the market. There's nothing today that is the same as it was yesterday. There's different, every single day, there's different pressures, different factors, different participants, different everything in the marketplace. So, it's every day, it's a new game, right? So anyway, that was a long tangent for, we don't really have too much coming up this morning. We do have Bank of England, Governor Bailey is speaking, similar to what occurred yesterday. We had Mr. Powell speaking first thing in the morning. He's going to talk, give his thoughts on economic situation. So, and there'll be Q&A after it, I do believe. So this could potentially be a market mover. You've got the head of a major economy there that is going to give some a canned statement, and then I think there will be Q&A after this, and then Q&A following it, which as the market digests what the person is saying, there could be movement. So long and short of that is, maybe first thing in the morning you just step back and sit on your hands. You don't have to take a trade. With that said, talking about not having to take a trade, let's jump into forex, because that's kind of where we are right here. Let's jump into forex over here, and typically we'd start here looking for currencies that are moving. We want to identify which currencies are moving to strength, which currencies are moving to weakness, and pair those together, because we want to capitalize on that momentum based on the divergence between the two. However, as I look through the current ranges for the day, across the board, everything, with the exception of the euro versus the pound, and these euro CAD and pound CAD pairs, pretty much everything else has moved right at or exceeded its typical range. They've all kind of blown out what their typical range would be. Great day just to sit on your hands. The euro CAD and the pound CAD, potentially there's some opportunity. I mean, the pound CAD has moved almost 80 pips on the average of about 120. So could we get a quick 20 pip hit out of this? Yeah, potentially. Potentially. But keep in mind, there's pound news coming up. Not necessarily directly on the pound like a GDP report or an employment report or anything else, but it is news that when you've got the head of that bank, that's Bank of England, that's speaking, it could be market impactful. So I would just say today, based on where everything else is with their ranges, just sit it out. You could look for something here though, pound CAD or euro CAD, if you really wanted to watch and see if we get a nice little divergence. We can see how they're over here. We can see they're both trading, the pound versus the CAD or the euro versus the CAD. They're all below the midpoint, and they're trading right with one another. There's no movement. So, if we do get a burst of momentum, one direction or the other in the pound, it'll probably be during the time that he's speaking, and then it still won't be an opportunity to get in. So for me, I would just say, based on this, probably a good day just to sit on your hands and not do anything with it. If you do choose to trade it, trade it using the regular plan, which is wait for news to happen, wait for the speech to end, wait for the Q&A to end, and then see what the market is doing at that point. Let the market return to normal and start moving again, and then play your divergence. Look for a strong currency and pair that against a weak currency. Do keep in mind with what the volume detail is telling you over here. You want to see on the currency pairing that you make, what's the volume detail look like? How's its range been? If it's exceeded its typical range, maybe you're looking at reversal trades. Make sure that the volume detail supports the direction that you're looking to trade. But I really feel like it's probably a good day not to do anything. You know, doing nothing is just as much of a trade as trying to pick that perfect entry. You know, being patient is very, very important too. Moving on over here to the S&P. We're at 35. We broke it yesterday. You know, we talked about 3080 as kind of that key area that we were hovering around. We had the news in the morning, and then after that we broke through and cracked through 3080, and overnight floated up and through 3500 over here. So, you know, brand new area up here. Big whole number, big area potentially as resistance for us. We'll see what happens when U.S. session, gets fully underway. I don't know if we'll see, what we'll see as a result. I mean, no one does. There's always speculation. You got two sides of every coin, right? Long and short of it, though, is the bias. The 4-hour bias is long. 30-minute bias is long. So we would still, if you're trading with the trend, we'd still be looking for long trading opportunities. What would that look like for us? Well, we could look at a break. Just look at a breakout of 3,500. If we break 3,500, close above it, we could certainly look for continued long trading opportunities. So that's a breakout, would be above 3,500. Pullbacks, we can see 3,490 has been, yesterday, that was a pretty well supported resistance area between 39.95 and 34.95 and 34.90. That's pretty good resistance area. It broke through it, so now we can see that 34.90 has become support. So we could look for a pullback to 34.90, maybe even as low as 34.80, and that would be your area, kind of a top edge and a bottom edge, to look at potential long entries on a pullback. And then, of course, the other way to trade it is the way that we talk about quite a bit. That's the very kind of systematic way of trading it, which is letting price pull back and watching for price to make lower highs and lower lows. And as it does that, trail that entry point on the top of that previously closed lower high, and then wait for it to break out of there. And that's the other way of looking to trade that pullback, and then getting that break on some momentum. So there's a few ways to go about it. One is just a breakout, setting a whole number breakout. 3,500. If we break 3,500, I want to be in long. Boom. Second way, looking for pullbacks. To key areas, 34.90, 34.80 would be your key areas over here. And this is kind of a top edge and a bottom edge. So if you're in between there, it's probably a good spot to look. 34.80 being the lowest. And if it breaks below 34.80, be prepared to bail out, and because it might continue down from there, right? So, but you've got a top edge and a bottom edge of that buy at the point of support down here, which would be 34.90, 34.80, or again, just trailing your entry point, trailing your long entry at the top of previously closed candles where price has made a lower high and a lower low. So there's your options there. On crude, the bias is long on the 4-hour, but short on the 30-minute. So that's telling us, hey, let's stay away from crude because we have a mixed bias. We don't have a confirmed directional bias. Crude has been struggling. It's I don't know if we can look at it here. Let me go back to a longer time frame. Crude pushed up, broke through here. If we look back, it was on a really nice tear to the long side, and it's kind of topped out. It's been hovering between 42 and 43. It's just been kind of hanging right here between these two. I said longer, not shorter. Yeah, here we go. So we've been pushing up. So we've just been kind of hanging right here between just 42 and 43. It's just been topping out right here. Seems this big move seems to be kind of exhausting itself a little bit. But for right now, our biases are mixed. If we look at that 4-hour, like I said, it's long, but on a 30-minute, it's short. So we're in a mixed bias. that tells us don't trade. If you absolutely had to trade something, I would just simply look at breakouts solely on this, and I would say, hey, if we break above 43.20, that could be the spot to look for buying opportunities. And if we break down below 42.80, that'd be the spot to look at selling opportunities. You could just bracket this in right here. Keep your stops pretty tight, and look for, don't look for profit points that are 2x to 3x of what you entered at, and leave it. Don't try to go crazy with it, because more than likely before it either A, continues on higher, or B, rolls over and starts going short again, there's going to be a lot more chop. So be aware of that. But for right now, today, you have a mixed bias. 4 hour, 30 minute are mixed. Right there, that tells you, hey, stop. Just don't do anything. But if you absolutely had to do something, you might look at that bracket that I was just talking about here. All right, gold, same deal. Got a mixed bias in gold. We've got a 4 hour bias that's short. We have a 30 minute bias that's long. Gold, another one. Right out of the gate, tells you, hey, don't do anything. Sit in your hands. It's a mixed bias. We don't have a clear directional bias on gold. My personal favor would be for gold to keep moving up, but the market didn't ask. No one phoned Brian and said, hey, Brian, what do you want gold to do today? So directional bias is mixed. That tells you don't do anything. If you absolutely had to do something with gold, personally, I would still look at longs, but again, the market didn't ask me. And how would you look for long opportunities in gold? Well, I'd look for pullbacks. Look for pullbacks if it can float back down to 1950, 1960 is that top edge. I'd look to buy off of that. But again, the bias is mixed, and that tells you don't take any action. Just sit on your hands. And I just want to reiterate that, guys. It's so important. I use that Kenny Rogers reference a lot, from the song The Gambler. You got to know when to hold them, and you got to know when to fold them. You got to know when to walk away. Having a trading plan that gives you quantifiable reasons for what to do, right? If you're looking at multiple biases on multiple time frames, and if your trading plan says, hey, if these biases are mixed, that's when I walk away. Then do that. I just can't stress enough. We get ourselves into trouble by thinking we're smarter than the market. We get ourselves in trouble when we have often when we have a string of wins, and you might be on a winning streak for 2-3 weeks in a row. It just feels like every trade you get, is going in your favor, whether it's a small win or a big win. And then we start getting cocky, and then we see a mixed bias, or we see something that where our belief in what's going to happen, or our gut, that spidey sense, whatever it is, counteracts whatever our trading plan is telling us, and we think that we're smarter than that. We start deviating from the plan, and that becomes that slippery slope in our overall success. So I just want to keep throwing that reminder out there. I know people don't want to hear it, but end of the day, the thing inside our head, our little brains, is what is the thing that makes us successful or unsuccessful. I mean, honestly, there's 1,000 ways, million, more than that, ways to pick an entry and to find an exit and to find a profit point. Everything comes down to how you execute a plan and how you do that consistently, and whether or not that plan has an edge. And the plan only has an edge if you stick to it. It doesn't have an edge if you start deviating from it and trying to trade emotionally and from your gut, and thinking that you're smarter than the market. It just doesn't. And anyway, I don't want to be Debbie Downer on that, but it is what it is. And the sooner that traders realize that, stop hunting for systems and just finding something, sticking to it, and doing it consistently, that the sooner traders become good traders. So anyway, that's it. Just wanted to share that. I've been here for 20 minutes. I'm going to let you guys go. get on with your day. Giving us some trade ideas around things that you can do both in Forex and over here in the futures market. So hopefully you do something with that, or do whatever your plan tells you. All right. So that's it for now. It's Friday, so I'm gonna give you my standard Friday reminder. Great time to create a trading plan. If you don't have a trading plan, you haven't taken time to develop one that's kind of unique to you with your own set of rules of when you enter, when you exit, how you manage your risk, do it. Take today. Got a lot of mixed biases. Take today and then go do it. Take the next 3 days to, take an hour a day and just kind of work through and figure out your trading plan, write it down, and make sure you've got a set of rules for how you're going to manage your trades. All right. Have a great day. Bye.